The market moves in ways that causes maximum pain. Now, this theory applies to every asset class, right? Stocks, cryptos, you name it. But as Bitcoin holders, I think it's really useful to view our current market situation through that lens, because darn it, right now it's a very uncertain time, right? And really confusing to trade or invest in. So in this video, I'm gonna take a look at 3 maximum pain scenarios in my eyes that might play out and how I'd navigate each one beyond just dollar cost averaging. So if you find this helpful, then you know what to do. Strap in, my friend, and let's dive right in. Look guys, I'm not a trader by any stretch, right? I'm more so a long-term investor. But after the brutal 2018 bear market, I vowed never again to take the same approach. Fast forward to today, the market's not making it easy, right? We have very rocky times, a lot of choppy action, sideways movement, and huge debates like, are we in a true bear market right now? And that brings me to the million-dollar question. What's next for Bitcoin's price action? I started thinking about this question too and wanted to marry it with this max pain theory. So I came up with some ideas for max pain scenarios that I want to run by you and get your take on them. And I'm gonna start with the most chill one to the craziest scenario and share with you my analysis on why each one would be a ton of pain. So the first scenario I call 1,000 paper cuts, right? In this case, we just range sideways for most of the year and go between like the mid 20Ks to the low 50Ks, not really doing that much and just faking out a lot of people, right? A lot of bull traps and bear traps in between. In this situation, active traders would get wrecked a lot, right? It would be liquidations galore. Momentum traders would also bleed capital because there's no clear direction being established. Regular holders would just get bored and we'd be stuck in a zone where both the bears are wrong and the bulls are wrong too, right? That's why this one is painful. Situation number 2, I call takeover by the bears. In this case, the bears on crypto Twitter are right that the bull market is indeed over, and those of us remaining bulls are in denial, right? And this would be super painful, especially for holders, because many of us barely took profits and we would once again ride the roller coaster all the way up and all the way back down. Honestly, we were waiting for the traditional top signals to flash before taking profits, right? Like a blow off top or other on-chain metrics to reach their usual top value. If you're curious about what I mean, you should definitely go watch my bull market case video that I'm gonna leave in a card up here and in the description of this video. You gotta remember though, Bitcoin has had a really short 12-year history so far, and it's in our human nature to try to fit things nicely with the past. But it doesn't always have to follow everything to a T, right? It can be blazing a brand new trail and producing new data that may not fit in any of these past models. What does this mean for Bitcoin's price action though? Well, we could be like 2017, a long 1.5-year bear market, with multiple fake outs, peaks, and valleys in between. And we could set a low price of somewhere between 10 to 20K, which is my estimate, right? And that would make it a 70 to 85% total drop from the all-time high so far. And after that, it would start climbing back up again in 2023, leading to the next halving in 2024. Now, the third scenario is what I call the double pump. This one is more like 2013, where Bitcoin had 2 peaks, right? The first one back then, it rocketed to $260 before dropping 82% to a low of $45. Then it ranged sideways for like 6 to 7 months before rocketing over 2,500% to $1,160. So if something similar were to play out right now, that would mean Bitcoin would drop to around 15K in the next couple of months. That would scare the crap out of us, right? Because that's lower than the previous cycle's all-time high. And that would be uncharted territory for us. Another big scare at those levels is if Michael Saylor would have to sell some of the Bitcoin stack, those 100,000 Bitcoin that he acquired from MicroStrategy, if his losses are too high and his board of directors forces him to. Now, based on some analysis I've seen of how MicroStrategy is set up, that's not going to be likely to happen. But still, if he had to sell any of that, it would really wreck us. Anyways, back to this thought exercise, right? After reaching those lows, we would recover to around the 30K levels once again before rocketing end of year or early 2022 to somewhere around the 100K to 200K levels. This is if we were to follow a similar pattern to the 2013 double top. And that would be really maximum pain in this case, because People would sell thinking it's over and that we're in for longer bear markets. But then they would miss out on the crazy rocket ship coming just a few months later. The whole time it's rocketing, they would be in disbelief, thinking that this is a sucker's rally, when in fact it's the real deal. Actually, even though this is the craziest scenario in my mind, if I could choose, I would choose this price action because that means that we could still get to 6-digit BTC that many of us were waiting for in this cycle. I just hope that the pain happens soon and happens fast so that we could start to recover afterwards. Okay, cool. So we have these 3 painful scenarios, right? 1,000 paper cuts, takeover by the bears, and double pump. But what should we do with this knowledge? Before I share some of my thoughts on actions that we can take, I want to say that if any of these 3 scenarios play out, rest in peace, RIP to those price models and analysts that promised us Lambos in 2021, because they lose all remaining relevance in my mind, like the supercycle theory or Plan B stock to flow model, which I already think is wrong, by the way, or Willy Woo's on-chain analytics, for which he is still bullish right now. Now, I've made a lot of videos explaining these that I'll leave for you in the description below if you haven't heard of them yet. Alright, so with these max pain scenarios in mind, how should we play them as investors? Well, in this channel, you know that we always recommend to dollar cost average. Bull market, bear market, doesn't matter, right? We should always be stacking Satoshis, and I personally use Swan Bitcoin to do this weekly, and I'll leave you my referral link if you'd like to sign up with them down below. Now, if you feel too worried right now and that there's too much risk for your appetite with respect to your current portfolio, then trim a little bit of your position, right? Especially in the smaller alts that always get more of a beating than Bitcoin during bear periods. You can always save that dry powder for later, right? And buy in again if we do in fact go lower, like in one of these scenarios. Now, on the topic of dry powder, right? This is the cash that we have sitting on the sidelines. One thing I really recommend is to be patient and allocate slowly. Don't be that person that really buys the dip eagerly during bear markets and then runs out of cash to deploy when it continues to drop further and further. That was totally me back in 2018. The second thing when it comes to deploying our dry powder is identify buy zones on either side, right? By looking at support and resistance levels. Like, let's say the price of BTC is around $33,000 right now. I'd set a buy zone at the lower 20Ks and one at the mid 40Ks. That's a pretty wide range, but the point is I will either buy some at some really low and juicy prices or just smash it back in when it starts breaking out again. Oh, and by the way, this is in addition to your regular dollar cost average, not instead of it, okay? Now, pro tip, the last thing I do is a little bit more advanced, but when we get near the bottom of any potential bear period, or when you think that's the case, or whatever price that's low enough for you, I'd buy some leveraged BTC and ETH tokens by Index Cooperative, right? These tokens model a 2x leverage position. So if Bitcoin goes up 10%, these tokens would go up roughly 20%, right? But you don't need to worry about constantly monitoring or managing a leveraged position. That's the beauty of using these DeFi tokens rather than margin trading in the traditional sense. But of course, the risk here is that we can't predict when the real bottom is. And also this token will fall much more than Bitcoin if it drops in price. So keep that in mind if you do use this instrument and size your position accordingly. Don't just go all in because that's how people get wrecked. So we've identified 3 max pain scenarios and I've shared some potential ideas of how we can make the most out of these situations. But I want to pause here and admit that this could all be wrong, right? We have no idea of what will happen next. Maybe there won't be any more pain and it'll be back to the bull run soon. Maybe the bulls are right and this bear market will be super short because this time it's different. Something tells me that our upcoming path won't be that easy though. But let's wait and see and revisit my analysis in a few months. While we wait though, watch me make my strongest case for why we're still in a bear market here, and this video for the flip side for why we might be in a bear market now. And then let us know which side is more compelling to you. I'm Kevin from BFB. See you on the next one and cheers.